What's up, guys? Welcome to the multidimensional trading video series. This is video number 2 or part 2. So we are going to get into it. We're going to go to our second lesson of the 10-part video series. And I did this in the last series, but I want to reiterate it again so people who are new, who are coming in, just understand how crucial it is to be objective with any trading chart. So let's get into it. So on the chart currently right now, we're looking at Bitcoin on the 1 hour chart. And we've already have this horizontal line basically drawn out, right? See, each touch is an equal point of contact on this horizontal line. And that's what we're basing our entries on for a trade. Okay, we're looking for these lows to be equal, right? And that's equal in about price, equal in about volume. You can even look at volume. And equal physically, right? So time, equal in time, basically. Price, it's at the same price, at the same level. And space, right? Physically, right? It's physically at the same point physically. It's on this horizontal line, right? So they're equal lows, right? We want to make sure that the lows are equal across multiple time frames. So the way we do this is that we can all see these equal lows on the 1 hour. We can go to the 4 hour and we can see the same equal lows. Bitcoin also smashed right into that 369-day EMA too as well, which is another great confluence to be able to take the trade right there. Now, had you planned a limit order or trade right there at the 369-day EMA, you would be up already just about $2,000 worth of movement on that trade. As far as percentage goes, that would be just about 2% it ran up. 2% is a huge move on Bitcoin, right? It's enough to definitely day trade. But the point is, at the equal lows, you will see multiple points of contact. Now, we do use multiple confluences, right? We're using the 369-day EMA plus the equal lows at the same time. So if we can see both, that's even better, right? That's more of a signal to take the trade. That gives us more confidence to take that trade. It's as simple as that. The more calculations or the more confluences you have, basically the more signals saying, hey, this is the area. This is where to get into that trade. That's better for the trade. That way you know you have a good trade. Okay, that way you know you're confident you have a great trade when you have multiple confluences. Okay. So we have the equal lows. Remember, the equal lows can be found on multiple time frames, and that's the point. If we can find the equal lows on the 15-minute, right, we have the same equal lows. We can find the equal lows on the 90-minute. We have the same equal lows. We're looking for equal points of contact on this horizontal line across multiple time frames, right? If we find that, we know we have a high probability trade setup. We have high confidence to take that trade. Okay, so that means you can go across the 1 minute, okay, all the way up to the daily, if you like. If you can find those lows across multiple time frames, you know they're high probability. equal lows on the daily, all the way down to the 1 minute time frame. That way you know that it's a really strong support area. That's how we use the equal lows. It works. It's valid. It's where you're going to find strong support for price, and that's where we buy. We're traders, right? We buy support, we short resistance. Using the equal lows is just a method to find support. That is it. Okay, let's go to that 4 hour again. Using this 369-day EMA is just a method to find support. Okay, now if it was the other way around, I'll say this again, I always flip the chart just like last lesson. It was running up to this 369-day EMA and the chart, was going, this was green, you would want to go short right there, right? You wouldn't want to sit here and, oh, okay, it's going up, let me long. You would have this 369-day EMA acting as a roof, plus these wouldn't be equal lows, these would be equal highs. Okay, these would be equal highs if the chart was going up and it was running into this same setup, right? We would have the equal lows still, or I'm sorry, the equal highs on multiple time frames. It would be still equals on the 1 hour. It would still be equals on your 30-minute chart, right? See how it's equal right here, and the price is about equal. They were all at 92, 92 across this horizontal line, across multiple time frames. Remember, we're looking at multiple dimensions and we're making our measurements across multiple time frames, so we know we have strong, high probability trades. That way we're not just getting into anything that the chart might throw our way, that the market might show us. We're only taking things that we know and understand to have strong support or strong resistance, and that's all we're sticking to. Anything outside of that, let the market do its thing. The only thing we want to take are the strong supports, which are the equal highs, or the equal lows, which is strong supports, are the equal highs or resistance, or the 369-day EMA. Which, if, just like I said earlier, if we were running up to the 369-day EMA and this was going up in price, we would want to go short here or get out of our trade. Take our profit before it, front running, get out before everybody else gets out, right? Or if we were going short, we'd want to get in before everybody else gets in. Okay, this is it's like a game, but at the same time, if you stick to those very specific rules of this game, you're going to be able to be profitable almost every single trade if you only stick to those guidelines. And the one time or the few times that you're not profitable, you're still going to be able to take way more profitable trades to cover not being profitable on those few trades. And it is as simple as that, because the high win rate, the high success rate of equal highs and equal lows and the 369-day EMA will give you ample chances or ample trades that are aimed at profit versus losses. Okay, so using those methods and not worry about anything else outside of those methods is how you will stay profitable. So once again, for the equal lows or equal highs, change this back to equal lows. The only thing we're looking for is price to come down to the horizontal line that matches up with another equal low across time, right? Across multiple time frames, right? If it matches up on the 1 hour, great. Because remember, before this price came down, you can already have this mapped out. You can already have your line drawn and say, okay, well, when price does get to this area, it's going to be an equal low. It's going to be equal with this low. It's going to be equal with this low. And they're going to be equal across multiple time frames. On the 4 hour, the 1 day, the 30 minute, the 1 minute, the 15 minute, whatever time frame that you see fit that you want to trade. But you can always check the other time frames to make sure the lows match up across all of them. It doesn't have to be all of them, but you want to get as many time frames as you possibly can to match up and be equal, because that way you know it's a strong support area, or if it was flipped the other way, you would know it's a strong resistance area. And then using multiple confluences, just like we talked about in the last video on part 1, which is the 369-day EMA. And in this case, on Bitcoin, we have the 369-day EMA as an extra strong confluence. Okay, we get that nice poke right down into that 369-day EMA, and it gets bought up immediately. This is where we want to be, right here. We have our confluences for the equal lows, plus the 369-day EMA on our large time frame. Okay, last video we went over the 4 hour large time frame on the NASDAQ. This is the same setup. We're just taking that nice bounce off of the 369-day EMA. Plus, we have the extra confluence, the extra confidence, the extra signal of the equal lows. That's as simple as it gets. Everything else that's going on, we don't touch it. Here, you would have bounced very nicely because you would have took an equal low. Right? That's a 7% move on Bitcoin here. And this thing could keep going for sure. Currently, right now, a nice day trade, 2.3% on Bitcoin. Those are huge moves, depending on what you set your leverage at when you're trading. But those are huge moves. Even if you were just not swinging, but if you're just buying just to buy, you're going to want to buy at the best places, right? You're not going to buy when it's running up high. You're going to want to buy when it pulls back to a supportive area, because that way you get the best buys. Remember, anything that you guys hear in any of the videos or the series, it's all educational. It's all for educational purposes. Nothing that I say is for financial advice. I just educating because this is something I'm passionate about. It's something I like to do. And plus, I have friends, I have family that I would like to share this information with so they understand it and they can use it. So I appreciate you guys. You guys like the video, subscribe, watch them multiple times so you understand the concepts, practice, paper trade, and that's pretty much all you have to do. I will see you guys in the next video, which is video number 3 or part 3, lesson number 3. I will see you guys in the next one. That's all I got. Peace.